Hi everyone, I am Lim Jingyu, metric number 281745, and the title of my presentation is the internal and external factors that affect the performance risk of HSBC Bank Malaysia Berhad. First of all is the background of HSBC. The official name of HSBC in Malaysia is HSBC Bank Malaysia Berhad. The bank's name was inspired by the Hong Kong and Shanghai Banking Corporation Limited. It established its first banks in Penang, Malaysia in 1884. HSBC, as one of the world's biggest banking and financial service companies, provides all of its customers with services such as personal finance, commercial banking, investment banking, and Islamic finance. Next is the problem statement. I found that HSBC ROA is not impressive. It demonstrates that HSBC does not make the best use of its asset in order to make profit. The increase of company value will increase the company ROA and ROE. Besides that, external variables such as inflation, GDP, and interest rate can also influence a company performance risk. Thus, in this report, we'll find out the variables that will affect the performance risk of HSBC Bank Malaysia Berhad. Next, I will continue for the literature review. The literature review in this report can be separated into internal factors and external factors. Under the internal factors have performance risk, liquidity risk, credit risk, operational risk, and corporate governance index. While for the external factors have interest rate, unemployment rate, inflation rate, and exchange rate. Due to our report is about performance risk, hence I will only present about the performance risk. A company performance is an essential part. According to Al-Matari, company performance can be measured by ROE, ROI, ROA, and EPS, and only ROA and ROE is using while conduct this study. The ROA is an indicator of profit per ringgit of assets, whereas the ROE is a measure of how the capital of the shareholders was spent during the year. The formula to calculate ROA is by using the net income divided the total assets, while the formula to calculate the ROE is using the net income divided the total equity. For the methodology, sampling techniques was used to conduct this study. The population in this study is Malaysia banking industry, while the sample is the HSBC Bank Malaysia Berhad. The data is collected from the HSBC annual report from 2015 to 2019. And in this investigation, 3 models were used. Model 1, pool model for internal factors to the HSBC performance risk. Model 2, pool model of external factors to the HSBC performance risk, and the Model 3, pool model of internal and external factors to the HSBC's performance risk. Next is the most important part of the studies, findings, data, and analysis. The descriptive statistic table shows the mean and standard deviation of the data, and represents the numbers of observation, which is 5 years from 2015 to 2019. The correlations table shows the link between the performance risk and HSBC internal and external factors. Performance risk is positively correlated with HSBC's current ratio, operational margin, interest rate, and CG index, while have negatively correlated with non-performing loan-to-loan ratio, debt-to-income ratio, operational ratio, inflation rate, exchange rate, and unemployment rate. In this table shows that the CG index is the least significant to the performance risk, whereas the interest rate is the most significant to the performance risk. The study found that only the internal factors is significant to the HSBC performance risk. Therefore, I will only present for the Model 1 of this study. First is the model summary table. It illustrates the link between the dependent variables and the internal factors. The ROA is used as the dependent variables which represent the performance risk, From the table, we know that 99.9% that affect the ROA is the CG index, debt-to-income ratio, and operational ratio. Secondly is the ANOVA table. An ANOVA table is to demonstrate either the model of the research is acceptable and reliable or not. Hence, the p-value in the ANOVA table will show the reliability of this research. Based on the table, the ANOVA significant level or p-value is 0.017. Thus, we can conclude that the CG index, debt-to-income ratio, and operational ratio are moderately important to the ROA because the p-value is less than 0.05. Next is the coefficient table that analyzes the standard coefficient beta, t-value, and p-value. For model 1, the standard coefficient beta is negative 0.9 for the debt-to-income ratio, negative 0.238 for operational ratio, and 0.004 for CG index. This means that the CG index has the most impact on the organization while the debt-to-income ratio has the least impact. The t-value for the debt-to-income ratio, operational ratio, and CG index are negative 63.867, negative 16.433, and 0.292 respectively. Lastly is the discussions and conclusion part. The limitation for the study is that the research is limited to a single Malaysian bank HSBC and only cover 5 years annual report from 2015 to 2019. As a result, we can say that the internal factors have influenced the ROA of HSBC and only the CG index, debt-to-income ratio, and operational ratio have a significant link with ROA among the internal factors. The annual report shows that the ROA of HSBC is unsatisfied. As a result, there are few methods to increasing the ROA. First and foremost, HSBC can enhance its ROA by increasing its net income. Increasing sales while lowering the cost of goods sold is the most popular way to boost the net income. However, banks does not have the cost of goods sold. Thus, HSBC's net income can only be increased by raising other revenues such as the interest and trading income. Next is to boost the ROA is to reduce the total asset. For an example, if the revenue remains constant at 1,000 ringgit, but the total assets falls from 100 ringgit to 50 ringgit, the ROA will rise from 10 to 20. Therefore, HSBC could reduce its total asset to boost its ROA. In addition, HSBC can also improve its ROA by increasing the efficiency of its current and fixed asset. To generate a higher income, current assets such as cash, inventories, and account receivable should be fully utilized. HSBC holding cash could be used for investing. Furthermore, HSBC's fixed assets such as the bank's building also should be fully developed to gain profit. And that's all from me. Thank you.